Hello everyone, welcome to the EliteWave.com YouTube channel. This is Henry and today is Thursday, October 14. The time is 1 a.m. GMT. And today we're going to be looking at the chart of BAC, Bank of America. This is a 60 minutes chart here. So let's check this stock right here. We have Wave 2 in the intermediate degree ended at $38.36. Now since then the stock has started to rally, and that means we are currently with this structure here, we are currently calling this within Wave 3 to the upside, right? Within Wave 3 to the upside. And within this Wave 3, we are now ending one of three, right? Within the wave 3 we are ending one of 3 right now and pulling back in the wave 2 of 3 before the next leg higher. So as long as we stay above $38.36, we should be able to see further upside in the PAC. So let's take a look at the structure, looking at possible alternates and discuss why this view is being presented right here. Now, first of all, let's check out this decline from the peak from here. Now, you might be saying, well, shouldn't be, or couldn't this be counted as a 5 waves down, for example? Because if we can count this as a 5 waves, as a diagonal, of course, because you got an overlap here. So let's say if we count this as a diagonal and then end it with 1, then, technically speaking, you could have started a new bearish leg, right? So like a 1, 2, and then 3, 4, 5, and can go down impulsively. And you see this could be a diagonal, let's say, with an overlap here. But the thing is, if you look at the RSI, you don't see a divergence right here between this one and this one. There is no divergence right here. And wave 5 in the elite wave is usually with the momentum divergence because it's the end of the move and lacking conviction and so on. That's the wave personality for wave 5. So usually we'll have a divergence at the lows. We don't have a divergence here. Even if you go down to the 15 minutes, you still do not see any divergence here as well. So it's completely erased. So that tells us that this is not a 5 waves move, even though you might say, well, I can count it as a 5 waves, but it is not a 5 waves. It is actually a corrective structure. We are labeling it as a WXY here. So if you want to label the internals, then this is another ABC right here, right? So that's it. It's a 7 swing ABC. ABC is a double zigzag ending here. So now we could be rallying and going down again, or as an alternate, we could have ended with 2 here and then starts to rally to new high from here. Now we are calling for another leg lower because some of the other indices in the market still seems to be missing the ideal 100% on the downside. Like if you look at our chart of the day from yesterday on SPX, you will see that it's still missing the ideal 100% on the downside. So let's say if SPX is going to extend lower, it's going to be hard for the PAC to by itself, starts to break to the upside, right? So that's how the correlation plays out and how we determine if it is possible to to extend lower a little bit more as a double correction. So there is a reason why we forecast in a certain way. It's not always going to be perfect. Perfection doesn't never happens in the market because otherwise everybody is going to be the richest person in the world if everything is perfect, right? So it's all about the logic behind it, the explanation, whether it makes sense, and then everybody has to make their own decision and do their own risk management. And that's just what trading is about, guys. It's not about 100% correct. It's not like black magic or anything, right? All right. Anyhow, so we're looking for a double correction here, and as long as we stay above $38.34, we should be looking for the upside. Now let's zoom out and get some ideas of the larger time frame. If I look at the weekly chart of the PAC, now remember there is a wave 2 here in the intermediate degree, and that is the same wave 2 on the weekly chart. So let me zoom out a little bit here. So if this is a wave 2, then of course this is your wave 1. So we're talking about by looking at this, we're talking about the cycle that started from here, from July 20th, right? So that's what we are talking about. From July 20th, we got this in on the weekly chart. This is actually a daily chart. On the daily chart, it looks very clear to me that on the daily chart, it looks better to be a three swing, right? I mean, if you upgrade to the weekly, it's even more obvious that this is a three swing here, right? On the weekly chart. So let's start from the weekly chart. So we got two important lows here, July 20th and here, and March. Now March 2020, everybody knows about this date, right? If you don't know March 2020, then you haven't traded for too long, right? March 2020, and this is July 2021, right? All right. So what do we have here? Now, if you take a look at the move from March 2020, what do you see here? Does it look corrective or does it look impulsive? Now, this one absolutely looks impulsive. There's no question about that, right? It looks impulsive for sure, right? It looks like a five waves. Now, if it is a five waves, what's the role? What's the role in five waves? Five waves impulse will not end in three waves, right? I mean, if it is a 1, 2, 3, 4, 5, that with 5 cannot end in three waves. But so far from here, the last leg I see is only three waves on the weekly chart, right? So that means we should be at minimum extending one more leg higher. At the very minimum, we should be able to extend. Now this is an alternate, so instead of one of three, this could be your three. But even if this is your three, you still need another leg higher regardless, because it looks like a three waves, right? So based on that, we are calling for the upside as long as we stay above this wave 2 here. Now, what sort of alternates can happen in which we will not see another leg higher? Well, for one, I can come up with alternate in which we have an expanded flat A, B, and then you get a 5 ways down C, right? But then again, we don't like to call expanded flat. It is less likely. Always is going to be lower probability if you're going against whatever in the sequence is. If the sequence is bullish making high, don't call an expanded flat unless it really happens. One I would say is like a bad habit that I see from many waivers, right? Especially those are that start to label Elliott wave. They love to call expanded flat when things go against what their forecast, right? Let's say somebody is bearish in the BAC, and then the fact it breaks to new high, and then they don't want to change their forecast, right? They don't want to change their forecast and admit, oh, okay, I'm wrong, but that's okay. Nobody can be right all the time, and so um, instead of admitting that, what they do is, okay, well, it's still bearish anyway. It's gonna be doing an expanded flat, so that is a no-no, right? You always will have a lower probability when you do something like that. Expanded flat happens, but don't forecast it until it really happens, right? Because you always have a lower probability when you go against the sequence. So here, one possibility we are not going to extend higher, like I mentioned, is going to be an expanded flat. Now, if it is an expanded flat, that means this cycle is over, because then this is too big to be a wave 4 from here. For now, I can still count this as a 1, 2, 3, 4, right? It seems to me 1, 2, 3, 4. I don't see a 5 waves completed yet. Yeah, we do have a new high, so technically you can call this 1, 2, 3, 4, but then your wave 5 is still only in 3 waves, at least when you look at the weekly chart, right? So one way is to label it as an expanded flat, but then if you label it as an expanded flat, that will be too big to be wave 4 from here, which means this cycle is already over. And then if this cycle is already over, it doesn't look like a 5 waves yet, because you cannot end a 5 waves when it is 3 waves at the end of the move, right? And you cannot call this with it's gonna be difficult to call that to be a 5 waves. So one way is an expanded flag. Another way is you force it to finish. You force this to be a 5 ways up here, which doesn't look good. Uh, can I do that? Can I force it? Well, if you have to, I guess you can, right? You call this, like a 1 2, and then let's say you call this 3 4, and then you call this 5. Yeah, you could, if you want to force it, call it 5 waves, and then call it completed 1 2 3 4 5, and then suddenly you got the biggest pullback here like this, right? Suddenly you got the biggest pullback. But you correlate again, looking at all the other instrument. At the SPX, I explained yesterday, the structure from the high looks corrective, it doesn't look impulsive. And also BAC itself doesn't have a divergence here, so it doesn't look like a 5 ways down. So when you combine all those information you have, then you basically conclude that I think it is more likely we're going to extend higher as long as we stay above $38.34, right? So that's the way it is in forecast. It's all about probability and trying to come up with the reason why you believe things are going in a certain direction. It's not by any means 100% thing every single day, but I think the more important thing is the logic behind it, as well as understanding the alternates, as well as being able to manage your risk if you decide to trade. So I think those are the criteria and the elements that you need to have in order to be successful, right? All right, so that's it for the thought of the day for today. So I'll see you all again tomorrow, and have a nice day, everyone.